This is 2016 published accounts. It's question 7 and it's Atkinson PLC. So the first step, as always, read through the question the whole way through the trial balance. Make sure you check and see what your year end is. Read through the trial balance, see if there's anything new in there that you need to be watching out for, and then read through all of the workings. Okay, so the additional relevant information that they give us in the question. So after that, when you're about to start doing the question, the first thing you should do is write out your page, this page here where we're going to have all of our workings. You need to have your headings. So there's going to be your cost of sales heading, your admin, distribution, other income, other creditors, debtors, and your taxation. Okay, write those out and start filling in anything that you have from the trial balance where you don't think there's going to be an adjustment. Okay, so you'll know if you're going to have to adjust something from when you read the question. So anything with a star beside it or with a little X beside it is what I got from the trial balance at the start. So I popped in my opening stock. In cost of sales, I had opening stock, purchases, closing stock. In admin, I had just my trial balance figure. Distribution, just the trial balance figure. In the other income, I had rent income and I had discount. So all of the things with these X's have come from the trial balance. Okay. Then we have our other creditors. Okay. There was nothing in that, so I have nothing with a star there. My debtors, I was given in the question, and I was also given the provision, so I put both of those in. And in my taxation section, which is in the balance sheet, okay, I had my VAT figure. Okay, and the rest then I got from the working. So once you have that filled out, so as I said, put in your headings and start popping in the information that is given to you in the trial balance. Once you have that done, then you're moving on to the adjustments, okay? And this is my adjustments page here. So you're going to do your adjustments on this page, and then you're going to refer back to the other page and slot the figures in as you calculate them. So the first working in the following relevant information section is, the first one was stock, but we don't actually need to do anything with that. We know stock is going to go into the cost of sales section, and it's also going to go into the current assets in the balance sheet. So I already have that stock included on my other page. Then it says the patent was acquired. So we got the patent on the 1st of the 1st 2011 for €77,000, and it's been amortized over 7 years in equal installments. Okay, so the patent was worth 77,000 and we're writing it off over 7 years. So that has given us a cost of €11,000 per year. And it tells us that the amortization is to be included in the cost of sales. So the €11,000 is going into cost of sales. And I popped that in here straight away. Patent written off, €11,000. Okay. Then I have my new patents figure. So 77,000 is what it was worth when we first bought it in 2011. But we are now doing the accounts for 2015. So if we start writing that off in 2011, we've written it off for 2011, 12, 13, 14 and 15, which is 5 years. Okay, if we're writing off 11,000 per year and there's 5 years, that means we have written off €55,000 so far. So from the 77 that it was originally worth, we've written off 55, which leaves us with €22,000 is the value of our patent, and that is what is going into the intangible fixed assets in the balance sheet. Okay, that's that working done. Then working number 3 or point 3 is provide for debenture interest. So debenture interest, we've got a debenture, which is a loan of €200,000, and we're paying 7% interest on that. So our interest payable figure for the profit and loss is €14,000. You then check your trial balance and see did we pay any. It does say that we have debenture interest paid. It's the very last thing in our trial balance, €12,200. So you take that away and find out how much we're still due to pay. We're still due to pay €1,800, and that is going to go into the other creditors down here. So debenture interest due, €1,800. So your other creditors are all of the current liabilities that you have that are other than your trade creditors. So your trade creditors go in on their own, everything else goes into other creditors. Okay. Next then is my investment income. So it says provision should be made for investment income due. So we have an investment of €250,000 and we're earning 6% interest on that. So our income from financial investments for a profit and loss figure is €15,000. We have been paid some of it already. So check your trial balance and see what it says. We have rental income. It's about halfway down there. We have, not rental income, investment income. It's towards the end. Where is it? Oh yeah, there it is. It's €5,400 we have been paid. So of the 15,000, we've already got 5,400, which means €9,600 is due. Okay, and that's going to go into the debtors figure. So it's going to be included in the debtors. So here it is in here, €9,600. Okay, so your debtors is any amounts of money that is going to be coming to you within the next year. Okay, so we are going to get that 9,600 within 1 year. Then it says auditors' fees of 18,000 and directors' fees of 26,000. So we need to remember provide for. So that means we haven't actually paid them yet. So my double entry is actually going to take place on this page. The first thing is they are both expenses. Okay, so I'm popping them in here. We've got audit fees of 18,000 and directors' fees of 26,000. We haven't paid them yet. So they are liabilities. So they're going into other creditors. 18,000 going in there and your 26,000 directors' fees. Okay, then that is that. The last thing there is your corporation tax of €56,000. That is going to go onto this page as well. In my taxation section, we haven't paid that 56,000 yet, so that's going to go into taxation, which is actually within the current liabilities. Okay, so we're going to have creditors, amounts falling due within 1 year. We're going to have trade creditors, we're going to have other creditors, and we'll have taxation. So my taxation figure is the VAT that's coming from the trial balance and my corporation tax. All right. The next working then is included in the administrative expenses is a receipt of €8,250 for rental income. So this is this part here. So remember, this is where we need to be careful of our debit and credits, okay? So we know rental income is an income for the business. So if we got paid rental income, it would have come in on the debit side of our bank account, okay? So that was a correct entry. That was correct, okay? But they completed their double entry in the administrative expenses. So that's where the double entry went, the €8,250. Now that's wrong, okay? That shouldn't have gone in there at all because it was income. So you need to remove it. So if they put it on the debit side, on the credit side, you're going to need to put it on the debit side, 8,250 to correct that. Okay, that I've just written that there because the Tipex was covering it there. So €8,250 on the debit side, and that's how you remove it. So if you're debiting an expense, that's a plus. So I'm going to need to add that back into the administrative expenses, which basically means when they made this error, they reduced their administrative expenses by 8,250. And how, if you have reduced something that you shouldn't have reduced, how are you going to fix it? You're going to add it back in. 8,250 being added back in. Okay, and we're going to complete the double entry then of putting the 8,250 into the rental income account, which is going to go into our other income in this published account. So the correct double entry would have been debit bank, credit the rental income account. Okay, they use this account, so we just need to fix that and then complete the correct double entry. So pull over your page, we need to correct it. The first thing was they included it in admin. They shouldn't have, and we know we've just calculated that we need to add it on. So I'm adding on the €8,250. The double entry should have been in the rental income account, which is going to be included in the other income in this question. So you're adding €8,250 in there as well. Okay. And the next working then is I'm actually going to look at buildings and the revaluation. So it says in point 5, during the year, land adjacent to the company's premises, which had a cost of 85, was sold for 120. So we need to be careful with that 85. When you're doing your tangible fixed asset note later on, you need to remember that we have that land. We had that land at the start of the year. Okay, so we had land, we sold it. Then it says at the end of the year, the company revalued its buildings to €800,000 and wishes to incorporate this value in this year's accounts. Okay, and then in the following point, in point 6, it says provide for depreciation of buildings at 2% straight line. So I'm going to do the buildings depreciation and the revaluation together in this working. So I'm starting off straight line depreciation. So that's basically depreciation at cost. Okay, so buildings in the trial balance, 700,000 by 2%, which gives me a charge of €14,000. Okay, and that's going straight into admin, which I did. I put that in here, €14,000 buildings depreciation. Okay, so the charge for the year is going into admin. In 2018 question, it did ask you to split that charge between your admin and your distribution, but in this question it didn't, so you're assuming it's just going into admin. Okay, so that's that. Add on your previous depreciation of €121,300. That's coming from the trial balance, which gives me a new accumulated depreciation of €135,300. Okay, stop there, don't look at that for the minute. We're going to check now and see what the story is with our revaluation. Our buildings are currently valued at €700,000 and our revaluation amount is €800,000. So they are going up in value by €100,000. So our new value is going to be €800,000 in my fixed assets. Okay, we're basically increasing the value by €100,000. So let's see. We need to then open up our revaluation reserve, and in there we're going to put the increase of 100 plus all of the previous accumulated depreciation. So when you're revaluing, you bring all of the depreciation back down to zero. So I had 135,300 and I removed all that, which leaves it at zero. My revaluation reserve is the accumulated depreciation plus the increase of 100, which leaves my revaluation reserve at €235,300. Okay, and then it says vehicles, 20% of cost. So 290,000 by 20%, which is €58,000, and that's going to go into distribution costs. So I have that gone into distribution, as you can see here. My vehicles depreciation, €58,000. And then add in any previous depreciation, which we do have in the trial balance, €104,000, which brings my new accumulated depreciation up to €162,000. Then it says, very last point is point 7. It says, a former employee has made a claim of €60,000 for unfair dismissal. The company's legal advisors have advised that the company will probably be liable for the full amount. So that full amount, it's looking like we're going to have to pay. So when that happens, we need to, when our legal team say it looks like you're going to have to pay it, you have to show it in the account. If it's unlikely that we'll have to pay it, we just put it in a note. But when it's likely, we have to show it in the accounts. The prudence principle applies here. So your double entry is, you're going to add it in there as an expense, the claim of €60,000, and your double entry is going to be your contingent liability, €60,000, and that's in your creditors amounts falling due after 1 year. Okay, so the next step is to total up all of your workings. So in our cost of sales, we have the opening stock plus the purchases minus the closing stock, add on your patents written off, which gives you €1,191,000. Over to admin, you have your 203 from the trial balance, then you're adding on your auditor's fees, director's fees, your rent income error, your buildings depreciation and that claim. So that gives your total as €329,250. Our distribution is adding up to 179. We just have our trial balance figure plus our vehicles depreciation. Other income, we have our rent income, the discount, both of those coming from the trial balance. Then we have our rent income of 8,250. So that adds up to 67,250. We then have our other creditors of 1,800 plus your €18,000 in auditor's fees plus your director's fees of €26,000, which leaves your other creditors at €45,800. Our debtors then is 129,000 minus our provision of €15,500, adding on your investment income due of €9,600. We then have our taxation, which is these two figures added together, which didn't actually total that up, which is 300. We've got a 7 and a 7, so €77,300 is our taxation figure, and then we have a contingent liability of €60,000. Okay, and then you're ready to go with your your profit and loss account, and then your balance sheet. At this point, you are now ready to do your trading profit and loss account or your profit and loss account. So make sure you have your full heading in, profit and loss account of Atkinson PLC for the year ended 31st of the 12th, 2015. You're starting off with your turnover figure. Your turnover figure is just your sales. We'd no sales returns in this question, so you're getting 2 marks for putting that straight in from your trial balance. Then our cost of sales figure coming straight from our workings, €1,191,000, which gives you a gross profit then of €608,700. Then we have our distribution costs and our admin expenses, minus 179 for your distribution and minus €329,250 for your admin. So see 7 marks there for your administrative expenses. That's because a lot of work went into getting that figure. Then you can put your other operating income in here straight away. You don't need to get that subtotal. Do you know the subtotal here, the 100,000? You don't actually need to put that in. You could just have distribution costs, admin expenses, operating income. That's fine. So add on your operating income, which was your rental income and your discount, and that brings your operating profit to €167,700. Okay, you're then putting in your investment income, but I'd like then if you could use the correct wording of it, so it should actually be income from financial investments, so make sure you're labelling that correctly. Then we have our profit on the sale of land, and that €35,000 is coming straight from the trial balance, and that is an exceptional item, so it has to be shown separate. So you're not putting that into other operating income or anything like that. You have to show that separate always. Then we have our interest payable of €14,000. That's also coming from our workings. Then that then gives us our profit on ordinary activities before taxation, and you need to have that wording correctly. So you're getting 1 mark there for that. So your profit before taxation is 203,700. Then you're putting in your tax, which is our corporation tax of €56,000. So you're only putting the corporation tax in there, and that gives you your profit on ordinary activities after taxation of €147,700. Our dividends paid are €43,000 coming straight from the trial balance, and that leaves you with a retained profit for the year. So the profit that the company are ending their year with is €104,700. Then you check and see what is the story with the balance that's in the trial balance. If it's in the credit side, you are adding it on, and if it's in the debit side, you are taking it away. In this question, it's in the credit side, so we're adding that 72,000 on, okay? Adding the 72,000 on, which leaves you with a profit carried forward at the end of the year of €176,700. So before you actually go on to your balance sheet, it might be a good idea, you might want to do your tangible fixed assets note. So if you just leave enough room for your balance sheet and then start your notes, and you could do this one first. So tangible fixed assets note, and then this will give you your figure for your tangible fixed assets for the balance sheet. Okay, so you need to have your headings for your 2 different assets that you have. In this question we have land and buildings and we have vehicles. Okay, so we've got 2 columns starting off up here. Up at the top you have everything got to do with the cost. Okay, so this section here is the cost, this section here is the depreciation section, and this last 2 pieces then are your net book value. So you're starting off with our cost. Let's have a look and see. At the start of the year we had land and buildings of €785,000, and that figure is coming from our buildings at cost, which is in the trial balance of €700,000, and it's also from the land that we sold. So on point 5 it says during the year land adjacent to the company's premises which had cost €85,000. So at the start of the year we had the premises, which is sitting in the trial balance, and we also had that land at the start of the year. So that's where the €785,000 is coming from. Then our cost of our vehicles was 290 combined, that's 1,075,000. Did we have any disposals? Yes, obviously we sold that piece of land, so you're removing that at cost price of €85,000. There was no disposals to vehicles, so in our total column we just have the 85 as well here. Then we have revaluation. We did have a revaluation on our building, so you're putting the increase in there. So the 100,000 is the increase, that's going in. Nothing changed with our Vehicles, so that's just leaving it blank. You can put a dash in there, you can put a 0 if you want, okay? So you're carrying that 100,000 over to our total, okay? And then you do your totals. So our buildings then work out at €800,000. No surprises there, that's the revaluation amount. Our vehicles are still at €290,000, which leaves our total at 1,090,000. Then you have your depreciation. So we have our depreciation charge from the start of the year, which is our previous depreciation, which is coming from the trial balance. We have 121,300 in land and buildings, and we have 104 in vehicles, which gives us a total of €225,300. You add on your charges for the year, 14,000 for buildings and 58,000 for your vehicles, which gives you €72,000 in your total column. You don't have to do that total there. That's a waste of time. Okay, so you don't actually need to do that. Then we have our transfer on revaluation. So you got rid of all of that depreciation, the €135,300. That can be seen in our revaluation working. You're removing that depreciation because when you do a revaluation, all of the depreciation is brought back down to 0. So we're starting off here looking at our net book value at the first, and to get that, it is your cost, your 785 at the start of the year, minus your opening depreciation of 121,300, which left that opening net book value for land and buildings at 663,700. And for vehicles, it's the 290. So this 290 minus the 104, which gives you €186,000, was our net book value at the start of the year for vehicles. And then my total figure is obviously there as well. And then you have to calculate your net book value, very last line. No surprises that our net book value of land and buildings is that revaluation figure. Okay, so you should always have your revaluation figure if a reval has taken place in a question. Okay, vehicles then, our closing cost of 290 minus our closing depreciation of 162 leaves your net book value at €128,000. And your total then is your €928,000. And that is the figure that will be in your balance sheet. Okay. So the next part of this question is doing out the balance sheet. So you're starting off with your fixed assets, okay? So you're going in with your 3 different types of fixed assets. Starting off with intangible, which is your patent figure that we calculated in the workings of €22,000. Then we have our tangible assets. That's coming from the tangible fixed assets note that I just did. It's €928,000. So it's your net book value at the end of the year that's going in. We also have financial assets in the form of an investment of €250,000, and you're adding those 3 up, which bring you to €1.2 million. Then we have our current assets. We're starting off, we only have 3. Always only have 3. Stock, debtors and bank. Stock, coming straight from the question, just in the first point there in the relevant information, €76,000. Our debtors were coming from our notes where we added up our amounts that we were going to have coming in within the next year, €123,100, and we have a bank balance of €90,000 sitting in the trial balance. So that brings our current assets to €289,100. Then we have our creditors, amounts falling due within 1 year, and we have our trade creditors of €94,000 coming straight from the trial balance. We have our other creditors figure coming from our notes of €45,800 and our taxation figure of €77,300. You're adding those 3 up and that brings us to €217,100. You're taking that from your current asset total and that gives you your net current assets of €72,000, which you're then adding to your 1.2 million, and that will give you your balance of €1,272,000, and you must call that your total assets less current liabilities. So your total assets, these two, less your current liabilities, is your €1,272,000. Then we're doing what we would usually call our financed by section. We don't call it anything. There's no specific heading in this question, so it's just we're starting off with our creditors, amounts falling due after more than 1 year, and that is our debenture. So our loan, we have a 7% debenture of €200,000. Okay. Next, we have, this is the first time we've seen this now. In 2018, it was unlikely that we'd have to pay it, but this time in 2016, it's likely that we'll be liable for the full amount, so you have to show that in your account. So you've got a small heading called Provision for Liabilities and Charges, and you've got your claim going in there. So your claim for compensation is 60,000. So the double entry for that was a debit in the admin, which you're adding it into your admin expenses, and you're crediting here, it's liability. Okay, so provision for liabilities and charges, and you're saying claim for compensation of €60,000. Then we've got our capital reserve section. We've got called up share capital, which is our ordinary shares of 480,000 plus our preference shares of 120,000, which brings our called up share capital. So our total issued share capital is €600,000. We also have our revaluation reserve going from our workings of 235,300, and we've a profit and loss balance of 176,700. That brings these three together as €1,012,000. Adding in your 60 and your 200 gives you your capital employed figure of €1,272,000. So the next step then is to complete the rest of your notes. So you have 4 notes. So use your handout that's on OneNote to help you with those notes. So there is your accounting policy note, where you're going to talk about your revaluation, the depreciation charge, how it's charged, and why it's charged. Then you're going to say how stock is valued on a first in, first out basis at the lower of cost or net realisable value. Then you're going to say your operating profit note, your dividends note, and your contingent liability note. So use the notes to help you with that are on OneNote.